And joining me for a closer look at what's playing out on the market scene at midday is Andrew Padoa from Sasfin Wealth. Andrew, thanks so much for your time this afternoon. So sentiment seems fairly positive this afternoon, but it does seem like traders are approaching markets with some caution ahead of the Fed's rates decision. Looking at, PCE numbers, jobs data, and the latest inflation number, it does seem like we're in for another pause, right?
I think that's fair and toweling. Good to see the South African retailers' stocks do nicely today. Our inflation is low, 3.2%, way below the midpoint of 4.5% for the Reserve Bank. But yeah, I think it's all going to boil down to what happens in the States. I don't think interest rates are going to be coming down as quick as everybody anticipated them to come down. There's also some risks now with what's going on with Trump and tariffs and kind of the unpredictability there. So I think it would be a bit premature to aggressively cut interest rates in the near future.
And
let's see what happens.
Yeah, you touched on our inflation print and how that might influence the SARB's next decision, not tomorrow's one in particular. But looking at the SARB, it does seem like a lot of economists are divided on expectations in terms of whether we will get a cut or if we will get a pause. Where's your head at?
I think we're going to have a pause. I know inflation is low, so there is kind of room to bring down interest rates. But I think, again, just given what's going on around the world with tariffs, what's going on with South Africa-US relations, there's just a lot of things up in the air. And I think it might just be prudent to just keep rates on hold for now until dust settles a little bit. Because the last thing you want is to cut rates and inflation comes back like it did during COVID. And then we had a really, really tough time in 2022. We don't want a repeat of that.
Sticking with the central bank theme, Andrew, do you expect to hear more commentary from central bankers around, Trump's trade policies? They do tend to, stay away from the politics of it all. But considering that we have seen some of these tariffs being implemented and the risk to inflation increasing, do you expect to hear more commentary around these tariffs from the Fed, from from the BOE, as well as the SARB?
Yes, I'm sure it's quite a big factor in their decision making as well, just with what's going on. So I wouldn't be surprised if they had to mention it. At the end of the day, tariffs are not great as it creates uncertainty, but it also could be inflationary. And that, I think, is the risk. And that's the challenge for all this around the world, is what's going to happen now with these tariffs, and are they going to be inflationary or not?
The tariffs really, sparking that flight to safety. And we've seen, gold remaining above that 3,000 mark. Is there more room for that yellow metal to continue running? It seems like there's nothing stopping it at this point.
Yeah, it's been wild to watch, and you look at the gold stocks and the JSE and what they've done year to date. Some of them are up over 50% year to date. So on gold, I think there's likely to be room to run. It's the reason why I'm not selling gold for the clients that have got it. I'm not sure I'd be buying it right now, though.
Too expensive.
Yeah.
Let's look at currency actions. I mean, the rand has been holding up really well against the dollar in particular. Yesterday, it hit a near 3-month high. Is it just a dollar story here, or are we perhaps seeing the rand's risk profile changing?
I think it's more dollar related. We're in fact really surprised with how strong the rand is compared to the dollar, but I don't think it's rand strength. I think it's more dollar weakness. We're seeing any rand strength as an opportunity to externalize funds for clients, and we're kind of hovering around that 18 level. So yeah, we're seeing this as a good window to ship funds offshore for clients. Over the long term, the rand halves every decade. So it's quite scary to think in 10 years' time we have this conversation and we're likely to be at 36 to the dollar. But that's what history shows us. So it's short term, anything can happen, but I think longer term, the rand weakness will continue.
Let's look at some company news. Not much out today, but Tencent out with numbers. The gaming and advertising revenue giving that company a boost. Profits for the fourth quarter surging 90%. What have you made of those numbers, Andrew?
So fantastic results from Tencent. They were only released in the last 2 hours, so I haven't gone into detail, but double-digit revenue growth driven by games as well as advertising. which is fantastic. Tencent had a great start to the year, and these results certainly did not disappoint. If we look at Naspers and Prosus, obviously they're up nicely as a result of these Tencent results. And just year to date, Naspers and Prosus up close to 20%. Where I think Naspers and Prosus, in the top 40, those two stocks combined are around about 18% of the index. And I think it's their performance is masking what's really going on in the JSE.
Yeah.
And the JSE is up single digits, but there's a lot of South African incorporated stocks that are, consumer related, like your fashion retailers that are down, 20 to 30% year to date.
All right, Andrew, let's just hit pause on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
So Roy referred to a platform company. I'm choosing a financial platform company called Adyen. It's a payments provider that's listed in the Netherlands. It's growing very strongly, very high profitability. And they used to just sit in the middle to facilitate payments, whether you want to pay with your credit card or your debit card or EFT. They made sure that from the merchant perspective, they could accept that payment, and that it would happen relatively frictionlessly, and that there would be no fraud, which is a very important part of what they do. So they are winning market share all around the world, from the US, Europe, Middle East, Asia. 1.2 trillion euros of payments went through their platform in the past year. They take 0.15% of the value of the transactions as their revenue, as their fee to facilitate the transactions. And if you're dealing with more than €1 trillion, that's a lot of money, even if you take only 0.15%. So still growing, still taking market share, very good e-commerce platform in the payment space. Adyen is my stock pick tonight.
So Renette it's a specialized holding, it's a holding company, it's an investment fund. They tend to hold the investments in any one of three buckets. So listed investments, funds, then cash and liquid assets. But up until a few months ago, it was basically BAT, and Pension Corp. Pension Corp is a business that basically buys pension liabilities from companies and manages them, and manages an exchange of cash flows. The reason why I'm picking this one is that during times of uncertainty such as this, you want to pick businesses where you have a strong cash underpin, conservative management, and well, the potential of something good happening.
Yeah.
And that's why I think your listener is asking, what happens with this cash? I think you generally have made money following the Ruperts. They tend to be conservative investors. Getting rid of BAT must mean that they're either going to pay it out, which would be a very solid dividend, or they'd invest in Pension Corp, which is a fantastic business, or take it into something else that would be equivalent to what Pension Corp is. So I think there's a valuation underpin here. I think you have conservative management. There's a discount to the value of the underlying stocks, and the track record of these investors has actually been solid over time. So during difficult times such as these, this is a reasonable place for a rational investor to hide in.
So Raynet and Adyen, your analysis on those counters, Andrew?
Okay, so let's start with Adyen. So I would agree with JP. Adyen is a really high quality business. It's not one we hold for clients, but it's been on our watch list for some time. Also, you've got the founders that are running the business, and we love it when you've got founder-led companies, as they're able to take the long-term view. They're not too stressed about, pleasing Wall Street's next quarter. They're thinking 5-10 years out, and they're able to adapt and pivot in changing business conditions, like Nvidia has, like Netflix has. Valuation has stopped us from holding Adyen, but with markets like we're seeing now, where markets are coming off, this is one that we're definitely having a closer look at. And then on to Raynet. So I also agree with Roy. So this is an easy one. But there's a similar pattern here with Raynet towards a Berkshire Hathaway, and I'm not saying they like for like, but Raynet's obviously a much smaller version. But there's a pattern here with conservative management sitting on large piles of cash during volatile markets, and I think that's particularly find the JSE a very difficult place to invest at the moment. There's not a lot of companies that really get my attention that I'm excited about their outlooks, but I think Raynet is one of the few that I would genuinely consider on the JSE.
Andrew, before I get your stock pick, just going back to ADN, I'd just like to get your sentiment around European stocks as a whole, because we are seeing globally a shift in sentiment towards European stocks. It does seem like a number of investors are sort of taking some of their cash out of the US and putting it into Europe.
Yes, that definitely looks to be the trend. We just focus on the individual stocks.
Okay.
So the likes of your Novo Nordisks, your Siemens, your Louis Vuittons, your Ferraris, your Hermes. We kind of look for those high quality stocks in Europe. The ADNs of the as another example. So there's a handful of stocks in Europe that we'd be looking at. But those, the names I've mentioned, are all the high quality ones that have got our attention.
All right, let's get your stock pick quickly.
Sure. So my stock pick today is Meta. Again, like ADN, founder-led business. Zuckerberg's not perfect, but buying WhatsApp and Instagram were fantastic moves. With the market pullback, Meta's down around 15%. They're on a forward PE of 22 times. For the quality of the business and its expected growth rates, I don't think a forward PE of 22 is excessive. And we see double digits expected returns from Meta going forward from here on out.
Andrew, thanks so much for your time and insights and taking us through trade at midday. That was Andrew Padoa from Sasfin Wealth.